Um, Welcome back to the channel. Thanks for tuning in. So tonight's video is going to be how to trade ICT London Close. So number one, you wait for price to talk to you at 11 a.m. New York time. So at 11 a.m. London close will begin. The silver bullet will end. So when the silver bullet ends, the algorithm receives a new macro for the London close. So I'm looking at Euro USD. At 11 o'clock, prior to that, we can see sell side liquidity being collected here. Market is in a discount with a swing high that got taken out exactly at 11 a.m. So when the London close begins, the market breaks a swing high. So that's a market structure shift early on. The market trades to this order block, and then they break it higher with imbalance and displacement, taking out this swing high as well. So that's a market structure shift. Fair value gap, let me try to zoom in. So we have a fair value gap here, denoted by the green candle. So that's a fair value gap. We see price trading to the fair value gap. Right there, you can buy that. Smart money will buy that. Stop loss below this candle to be safe. You don't want to put below this candle because you still have this all this imbalance that price could trade to. So rather put your stop loss below the candle that created the fair value gap initially. You target liquidity with buy side liquidity there. So you can see price trading to your buy side liquidity there, obviously. I just want to quickly remove this so that so you buy that, then the algorithm price is higher. Price is higher, fair value gap. So this fair value gap, that's an inversion fair value gap. Because now the price is going for, it already took out sell side liquidity, market structure shift. So now we're going buy side. Price is in a buy program. So this premium fair value gap becomes an inversion fair value gap. So coincidentally, price creates another fair value gap right here. So now that's still the fair value gap, but now it's gonna be support. It's gonna be a discount fair value gap. So price trades to it there. You can buy that. You can buy the stop loss below the candle that created the fair value gap, or stop loss below the fair value gap if you wanna be, because you expect this to be a balanced price range, I think. We have this order block here. Inside the order block, we have another fair value gap. You see pricing higher, then coming back. You can buy that. It goes up, comes back, gives you a second chance. You can buy that. This big candle will take out liquidity. This high, plus this high, that's relatively equalized. Take it out with a big candle. We have all this fair value gap, price traced to it. This volume imbalance, this volume imbalance initially created here. I like to put this. I like to extend these ones to the right, so you can see price coming to trade this, coming to find support here, and then it price is higher. It prices higher, but from here, this is lunch. So this is the end of London Close. I wanna call it London Close end. So at 12 o'clock, the algorithm will receive new instructions under the lunch macro. That's outside the scope of this video. Um, I want to show you that I actually took the London Close trades. So let me just go back. So we had this fair value gap here. As soon as price traded to that, I bought it here. With this order block, as soon as price came back to it, I bought it, and then I didn't buy anymore. With this fair value gap, price comes to it here, it goes up, and then um, I added another entry here. Okay, I got lost in price here, so you can, and then let me just go to 5 minutes, and then I closed up there. So I can't really remember my trading view chart now that I'm looking at this, because this is the MT4 chart. This one, they intentionally make it to like mislead traders. I can't even see what's going on here, but on my trading view, I can see very well. But otherwise, it's the same thing. So thank you for watching, guys. Now I can see it clearly. Now I can see clearly. So that trade that I opened, I saw this fair value gap. I bought it. That's what happened. So thank you for watching, guys.